I'm LaDonna Lockard, and this is Max Combos. I am back again today with Megan Anderson. Megan, I had to have you back. As you know, there was a pretty big meeting that occurred last week, and the Fed is saying, we know rate cuts are coming. I want to hear your opinion on it, though. If I could turn to anyone about this, I knew it could be you. Tell me your thoughts. What are you thinking?
Yeah, so thank you for having me back. Last week was a big week. It was the annual Jackson Hole Symposium where the Fed goes to Jackson Hole, Wyoming. And, we came out and we heard from Fed Chairman Jerome Powell, and this was the most definitive time where we really heard him say, now is the time to make a change. And so that in our ears really kind of meant, listen, we know that the Fed has been done hiking, but the question before last week was, when is the Fed going to cut? Now, the market had priced in a September cut, but now with Jerome Powell coming out basically saying now is the time to shift, this is a guarantee that we are going to see the Fed cut the Fed funds rate in their meeting next month.
Ooh, we love that. We love to hear that. How big of a cut, if you had to guess, what would your guess be?
The market is 100% pricing in a 25 basis point cut, but here is the thing. We are going to want to keep a keen eye on the employment picture. If we see the employment picture get worse, so the Fed always comes out with their projections, right? And these are kind of outdated at this point in time because the last time they came out with the projections, they were forecasting the unemployment rate for 2024 to not get any higher than 4.2%. So we're really going to want to watch the employment picture. What does it look like? Thursday, we'll get jobless claims. That will be in the focus of the Fed as well. And that's really going to determine how much they're going to cut. If we get something uglier than the market is expecting, then we have a higher chance of seeing a 50 basis point cut at the next meeting.
Wow, that would be such a market revitalizer. I mean, let's just cross our fingers, not that we want jobless claims to rise, but we need those interest rates to drop. But with jobless claims, I know so much of that has been attributed to the construction industry, to tech. Do you have any insights on that? Is there anything that you're kind of seeing from where you're at with maybe a little bit bigger picture?
Well, as you know, the BLS came out with their revisions and they had overstated the job pictures by 818,000. And that did not include private sector jobs, which is overstated by over 1 million. And so that the Fed is definitely going to take into consideration as they kind of determine what their next step and what their move is going to be. I think at the end of the day, it really has been interesting with COVID. I feel like the data that we look at has all kind of gotten out of whack, and it's going to take some time to really be able to trust in the numbers again. But all in all, I think the bigger message kind of walking away with all of this is we are headed to where the Fed is going to begin cutting the Fed funds rate. And what does that mean for mortgage rates? Well, it means mortgage rates are going to decline. So the biggest thing that I just want to say to your audience is, do you have the systems and processes in place right now to capture that refinance boom when it comes? Because over the past 2 years, there's been over 10 million purchase transactions. And when we see those mortgage rates decline, that's going to create a really beautiful opportunity to refinance. But you're not going to get that business if you haven't been staying top of mind with your past database. So whatever it is, make sure that you get those systems and processes set up and in place. We did recently come out with a new tool called Home Report, which allows you to stay top of mind with your clients on a consistent basis by sending an email out to them, letting them know the value of their home and different things that they can utilize and take part in.
Information is power, always. So why not utilize it, keep it, and just leverage it to your advantage, especially when it comes to what is hopefully an upcoming refi boom. So Megan, as always, thank you so much for being here. Appreciate your insights so much. And hopefully I'll get to see you again soon.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.